Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets shaking up the financial world. This week, KKR Infrastructure Conglomerate LLC is giving us a peek under the hood. And let me tell you, it's like finding a hidden level in a video game, revealing some interesting moves they've been making behind the scenes. So what exactly is KKR Infrastructure Conglomerate LLC? Think of them as a big player that invests in big physical things like roads, bridges, and power plants. They raise money from investors and then use that money to buy or build these infrastructure projects, aiming to make a profit over time. Now, why are we talking about them today? Well, they've just filed a report that tells us about some important things that have happened recently. It's a bit like getting a status update on a major construction project. One of the big stories here is about their borrowing. Imagine a company needs a big loan to build something. KKR Infrastructure. Conglomerate subsidiaries, their smaller parts that actually do the building, have updated their loan agreements. Specifically, they've added an extra $200 million to their existing credit line. What does this mean? It means they now have access to a total of $750 million. This is like getting a bigger credit card limit for business expenses. There's even a feature that lets them ask for even more money later, up to $2 billion. This gives them a lot of flexibility to grab new opportunities if they pop up. This agreement is set to run until April of 2020 and $50 million. This is like getting a bigger credit card limit for business expenses. There's even a feature that lets them ask for even more money later, up to $2 billion. This gives them a lot of flexibility to grab new opportunities if they pop up. This agreement is set to run until April of 2028, so it's a medium-term plan for their financing. This amendment is a big deal because it shows they are actively managing their finances to support their growth. It shows they're confident they can handle more debt to potentially invest in more projects. It's important to remember that this doesn't mean they've spent all this money yet, but it gives them the power to draw from it when they need it. But that's not all. KKR Infrastructure Conglomerate also sold some of their own company shares. They sold these shares directly to investors, not on a public stock market, which is why it's called an unregistered sale. They sold different types of shares, Class I, Class S, and Class D. Let's break down the numbers. Chapter 10, class with taftative, taftative, Tiv tafter chapter chafter tafter tafter 2 tafter chapter tivs. T tafter cave 3 aggregate consideration tafter tiv. Number timi meant severe 3 1 number vidi 7 taken meant to be navy number 2 the 1 by man 2 in man to review when the man the woman In total, by the end of July 2025, they sold nearly 7.5 million shares for a little over $218 million. Remember, these are just the numbers for this specific sale, and the final share count was confirmed on July 21st. Why didn't they sell these on a public stock exchange? This filing tells us they use special rules that allow companies to sell shares without going through the whole expensive registration process. This is usually done when selling to big, sophisticated investors who understand the risks involved. It's a way to raise capital more quickly and efficiently. This isn't a one-off event. Since they started in mid-2023, they've drawn in a massive amount of money through these private sales. Almost $4.5 billion. This really highlights their strategy of raising capital directly from investors to fuel their infrastructure investments. Now, let's look at another part of their operation, the infrastructure K-Series platform. This sounds a bit technical, but it basically means they work with other KKR funds that focus on infrastructure. Sometimes pooling resources or sharing strategies. Think of it as a larger team working on similar projects. On July 1st, this larger platform as a whole raised another $453 million. This shows a consistent ability to bring in significant capital for infrastructure projects. Cumulatively, this platform has raised over $7.4 billion. These are truly massive numbers, indicating a very active and successful fundraising operation for infrastructure investments. It's like they're constantly building and expanding their portfolio. And finally, the report is signed off by Sung-Bang Cho, who holds the important title of General Counsel and Secretary. This signature essentially means that this report is accurate and truthful as far as the company knows. So what's the big picture here? KKR Infrastructure Conglomerate is actively growing. They're increasing their borrowing capacity, showing confidence in their ability to undertake more projects. They're also continuing to raise significant amounts of cash through private sales of their shares and through their related infrastructure platforms. This suggests a strategy focused on aggressive expansion and capital raising within the infrastructure space. From a Warren Buffett style perspective, we're seeing a company that is clearly adept at raising capital efficiently. The ability to secure larger credit lines and consistently attract investors to their private offerings is a strong indicator of market confidence in their management and their investment strategy. The infrastructure sector itself can be very stable with long-term contracts and predictable revenues once projects are operational, which is attractive to investors. However, we also need to consider the risks. Taking on more debt, even for good reasons, always increases financial risk. If a major project encounters unforeseen problems or market conditions change drastically, that debt could become a burden. The success of their continuous private offering also depends on continued investor appetite for infrastructure assets and KKR's ability to consistently deliver attractive returns. The ear of etc. assets and KKR's ability to consistently deliver attractive returns. Looking at the overall direction, KKR Infrastructure Conglomerate appears to be on a strong growth trajectory. They are leveraging their brand and KKR's broader network to access significant capital. Their focus on infrastructure aligns with global trends needing upgrades in transportation, energy, and digital networks. The main opportunity lies in their ability to identify and execute profitable projects in these essential sectors. A key risk would be underestimating the costs or timelines of these large-scale projects or facing increased competition for attractive assets. In conclusion, this filing paints a picture of a well-capitalized and actively expanding infrastructure investment firm. They are making strategic financial moves to support their growth, and their fundraising efforts are exceptionally strong. The future for companies like this often hinges on disciplined execution and prudent management of their growing debt levels. Alright, that's our breakdown of KKR Infrastructure Conglomerate's latest moves. What's your take on these numbers, and what's a signal for the company's future? Do you think their aggressive growth strategy is the right play? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and be sure to subscribe for more deep dives into the financial world. And don't forget to check out our Discord community, linked in the description, where we chat about these filings and more. Thanks for watching, and see you next time on Corporate Decoder.